first thing that I want to go through with this class is the difference between Accounting 101 and Accounting 102. The financial side, which you should have just taken prior to this class, and what this class is all about, managerial. The first big difference is who reports go to. In Accounting 101, we were preparing reports for mainly external users. These would be people like the bank, the IRS, bank meaning a creditor if you want to loan money, if you want to try to get some money, and maybe stockholders if you're a corporation. Whereas managerial accounting, you're looking for reports that are from within and to people within the actual company. These are not intended and should not actually go out to any external users. And one of the main reasons is data from financial accounting, our 101 class, we had to use GAAP. Everybody has to use the same standards so you can compare. Whereas with managerial accounting, you don't necessarily have to. You can configure your reports to however you need best for your company, however you need to manipulate the data. Because it's not going to go to anybody else. You're trying to figure out the best way to make the best product for the least amount of money. And that's the whole purpose here of managerial accounting. Managerial typically involves a factory type setting. It doesn't have to be, but more than likely it usually is. The last thing I generally find here of Accounting 101 is Accounting 101 you really look at from a bird's eye view. You look at accounts that are summarized, like for example accounts receivable. You may have 100 different customers owe you money, but on your balance sheet you show just one net account receivable. Because it's none of the business of outside users who owes you money, just that you are due some money. But inside the business, it is important to break out a lot of those items. And so instead of having just one inventory account, for example, we're going to have quite a few different inventory accounts. We're going to spread out our inventory and look at it at different phases. So speaking of that inventory, here are some of the accounts that we'll have in our inventory actual listing. The first one being raw materials. Raw materials is going to be an inventory, one of the inventory accounts that we're going to have. And this, if we were McDonald's making French fries, the potatoes that originally grow are our example of our raw materials. It's not our finished product, but that's what we need to start the process. Direct labor. Direct labor is the people who actually work on the French fry. It's not management. It's not a repairman who fixes the machines that work on the French fry. It's actually the person who actually is hands-on with the potato of some sort. So we have the potato, the people who actually work on the potato, and then everything else is in one of these two categories, which they will combine to be called just factory overhead. But they include one of the things is indirect materials. Indirect materials would be if we had to use extra salt or extra flavoring for whatever reason, whatever it is. Those would be items that continue to make the French fry taste better. Another indirect material would be and this would be a machine part, thing that actually makes the fry or converts it from a potato into a French fry. Those would be examples of factory overhead. Indirect labor would be a factory supervisor or somebody who comes along and fixes a broken down machine. They don't actually work on the fry, but they are essential to making a fry in the end product. Each time now that potato moves into a different process and keeps getting further and further along, it's going to go into a different type of work in progress. A work in progress, we're going to have a different work in progress for each stage of production. And this is going to help us to be able to keep track of where our inventory is in becoming finished. And then finally, when it's all done, it goes into our ending inventory account. And as I said here, ready to sell. So these are some key items that we're going to look at and key terminologies that we're going to hit almost every week in this class. So these are things that we definitely want to know and keep and remember. A quick difference between when we're looking at costs of making a product, the product costs, we want to know what these product costs mean. What does it actually cost to make it in the factory is the best way to be able to use this. So that includes a supervisor's salary in the factory, that includes property taxes to pay on the factory building, that includes the direct materials to make the French fry. However, it does not include all the other costs that go along with a business, which include marketing, selling commissions to people, your salesmen, would include an accountant fee to whoever's doing the paychecks, or HR. Those would be considered period costs. And we break these out to figure out how much does it cost to make the product and what are all the other ancillary costs outside that. So I broke it down a little bit more here for product costs. The direct labors and direct materials are pretty self-explanatory. Where it gets a little bit trickier is with factory overhead, but just think about it. If the cost is attributed to the actual making of the product, it's considered a product cost. Anything else is a period cost. Now, as I mentioned a few minutes ago, one of the main objectives in a managerial accountant type role or a manager's role is to determine how can I get the best use out of my machines, use them to their most capable percentage, hopefully 100% use, and not go over that because you don't want to have a lot of breakdowns. But you also don't want to underutilize your machines and potentially not make profit where you can. So one of our goals in managerial accounting is to determine how much does it cost total to make the products that we make, and then breaking it down further, how much does it cost to make just one product. And I've given us this information, and you have this in your handout. The handout has the same numbers as mine, and so you'll want to use this as we go through and be able to refer back to it. But our first thing here, before I pull up the answers again, is if I make 5,000 shirts, how much is that going to cost, A? And B, how much is it going to cost just to make one shirt? So therefore, that'll give me an idea how much I need to sell it for. I don't want to underprice my shirts or put them way too far up. As you can see here, I got direct materials, my direct labor, and then everything else is my factory overhead. And we can kind of combine them, the indirect materials and then the indirect labor. The other thing I want to draw your attention to is the difference between a variable cost and a fixed cost. And we're going to talk about this in the next couple of weeks, but I need to go ahead and mention it right here. A variable cost is a cost that if I make one more shirt, it's going to cost me a little bit more money. Every time I make one more item or one less, the cost will change. Whereas my bottom two costs, if I make one more shirt or 50 more shirts or whatever, it's not going to change. Now, if I make 10,000 more shirts, it's probably going to change. But when I have depreciation and I've already purchased the machine and I'm beginning to use it, it doesn't really matter if I make 4,800 shirts or I make 5,000 shirts. I'm still going to depreciate it the same amount. And that supervisor is still going to be paid the same amount whether there's 4,800 or 5,000 shirts being made. Now maybe they do get a bonus if it goes much higher than that, but within that range, they're going to be paid a certain dollar amount. So I want to be able to extend these costs over as many shirts as possible. Whereas these, it doesn't really matter how many I make, the cost will still go up. So these are considered our variable costs. We'll talk more about that later. But what I want to get to here is, how much money am I going to be spending on making 5,000 shirts? And what's the cost per shirt then? So the first thing I look at is, how much materials do I need? And I've done the math and requirements, and I figured up it costs $2 to make one shirt of material, so cotton, polyester, whatever it is. And if I make 5,000 shirts, I'm going to have a cost of about $10,000. And then I do that with my labor. I figure it up that it costs about $2.50 to make one shirt. That's how much labor is going to be involved. So 5,000 shirts, that's $12,500. So I want to do that now for every one of my costs. I got my indirect materials, 30 cents a piece. And then these costs are going to be the same, no matter if I make 5,000 or maybe 6,000 shirts. So my total cost to make 5,000 shirts was $38,000. That's good thing to know, because then I can take that one step further and say, if I break that 38,000 over 5,000 items, one shirt cost me $7.60 to make. One thing where a new person new in this area, maybe a new manager who is only good at making shirts and doesn't really understand the financial side, may think, well, the cost of making this shirt, it costs, well, the polyester or the cotton plus the people I pay to put it together. That's it. So it only cost me $22.05 to make the shirt. That would be misleading, because it didn't really only cost you $22.05. You've got some other kind of hidden costs, the factory overhead, that you definitely need to include into your overall price. And then finally, when setting your final price, you're going to base it on this total cost, not just the things that you can easily see and determine. These guys are also there. You're going to pay your supervisor. You've got a machine that you're going to be depreciating that, well, you've got to allocate that cost. You can't just spend $2,000 and not expect to recoup it. So then somebody as a managerial accountant will say, am I using my machine at 100% capacity? Is the supervisor, does he have downtime? Could they possibly supervise making more shirts? And if so, how many more at an optimal rate? Because if I can trim these costs, since they're fixed, if I can trim those and spread them out over more shirts, that's going to lower my price per shirt and give me more of a return. Whereas these costs, if I make one more shirt, it's still going to cost me more money, no matter if I make one more or 10 more or 100 more. So our goal, figure out how we can best use everything and maybe even get it to 100% capacity. So my goal then is, can I make 7,000 shirts? And if I can decide, yep, machines I have are adequate, can handle that, the supervisors can handle that, well, now I need to refigure my cost based on 7,000 shirts. So my direct materials, yeah, they're going to go up, because remember, it's $2 per shirt, but now times 7,000 shirts, so that's $14,000. I got my other two variable costs added up now. And the big key similarity then is these guys don't change. So now my total costs do go up because I did make more shirts, therefore I had more materials, but the cost per shirt actually went down by 80 cents, from $7.60 to $6.80, because I was able to spread these fixed costs evenly. So that's the first thing that we wanted to talk about here in managerial accounting, is what all kind of costs go into making something. And it's just not those main obvious items, your direct labor and your direct materials. So that brings us down here to the second part of the lesson, and where I wanted to talk about and really get into the different inventory types. We're going to have quite a few, just like in Accounting 101, we had quite a few account receivables possibly, maybe one for every single customer, and then we combine them later. Here we're going to have a whole bunch of different inventories. We're going to have a raw materials inventory. That's that basic potato to make a French fry. It's going to be a raw material. It's going to be the steel that goes into a car and producing a car. Whereas the steel would be considered a direct material. And something like the screws that go into the car to actually hold it together, that's still considered a raw material, but it's going to be of the indirect type. Now the steel was a direct material. The nails or the screws would be an indirect material. They're both raw materials. It's just one goes towards direct, meaning actual usage in the car. It's a big part of it. Indirect material is more of the factory overhead. Work in progress, we're going to have a whole bunch of these. We're going to have a work in progress for every single station along the product line. So if we were making, say, wooden bats, we would have our raw materials be the wood, the actual chunks of wood, and then the work in progress maybe step one would be taking the chunks of wood and cutting them down to size. So that would be our cutting department of work in progress. And that work in progress would include the cost of the wood that I got out of the raw materials, because you got to keep all your costs together. The cost of that wood, and then any cost that went in the cutting area. So you had a little bit of the machine cost of depreciation gets thrown in there. Very minimal, but some. You've got some direct labor costs of the actual person cutting on the machine of the wood. And so now that bat, let's say that piece of wood costs $4, and now we just added another $1 of process in the cutting area. So now that bat's worth $5 in my inventory. And then we're going to move it to the sanding department. And then the sanding added another $1.20 to it of labor, of extra goods. So now that bat costs $6.20. Finally, once it gets through all of the stages, it becomes finished goods, and that's that ending inventory item. And once we get to finished goods, we can then begin to calculate our cost of goods manufactured. Cost of goods manufactured is a key component that we need to then go on to the income statement item, where hopefully you remember from Accounting 101, we then can turn this into cost of goods sold. One thing that we want to keep in mind too is in managerial accounting, just because the accountants have an end date, say every month, doesn't mean the process and the factory work stops then as well, and everything makes it through to the end of the production line on January 31. It doesn't happen like that. At January 31, we're going to have some items still in the cutting department of our bats, and some are still going to be in the sanding department, and then some are going to be in finished goods. They're going to be at different places, no matter when our cutoff point is. So we're going to have work in progress. I need to know how much work in progress do I have to start out right now, and then how much did I bring in new stuff during the month, and then how much work in progress do I have at the end of the month. We want to keep all of our costs together, not necessarily when they happen, but we want to know when they happen, and that's going to be important for some of our journal entries that we'll do next week. But we want to keep our costs together, even if they span multiple months or multiple reporting periods. So I want to keep, whatever cost that one bat made, I want to know what its final cost was. Okay, so some of the things that we're going to need, these 5 things we're going to need to determine the cost of goods manufactured. I want to know how much does it cost to make a baseball bat or 5,000 baseball bats. And these are the items we're going to need to know. We're going to need to know, well, how much did I start with in my work in progress? Because I most likely, if I have a cutoff date, I have some already started baseball bats. And then I need to add in all the new materials that I'm bringing in for new bats that I'm making this month. I'm going to finish up making these old ones that I've already started, and I'm going to make some brand new ones start to finish. And then I'm going to have some down here that I've started but I just haven't finished yet. And so those are going to be my next month's beginning work in progress, whereas this month they're my ending work in progress. And then of course, besides the materials, I'm going to have my other 2 items, my direct labor and my factory overhead costs that I'm going to need to factor in. So I've got this example, and again, I have this example laid out for you in your handout. And I've given us some basics here for the month of October, how much materials, raw materials we started with and ended with, how much stuff we had in process, started out already that already has some materials in it maybe, or it would, and then some other items we need to know. And then these are the things that I want us to be able to determine. How much raw materials did we use this month? All right, how much cost in total did I incur this month? And then finally, what was my total cost of the goods that was actually manufactured? Okay, so what we're going to be preparing, and this is one of the items that you're going to have in Wiley Plus, one of your examples, is I want us to be able to prepare the cost of goods manufactured schedule, the cost of goods manufactured schedule. So the first thing we do, as we saw here, my number 1, we need to know how much items were in my beginning work in progress. And I can find that right here in my beginning information. I had $1,500 worth of goods already started but had not been completed as of October 1. Second thing I need to know is how much materials did I use? Okay, I've got that information as well. First thing I do is I start out with my raw materials, beginning raw materials, and then it says add in my materials purchased. So I purchased 30,000, plus I have the 4 that I already started with. So in total, if I wanted to go ahead and add these up right here, I could. And I could say I have raw materials available to use. Hopefully you would say 34,000. I had 4 already there, and I brought in another 30. So I have 34 ready to use. And then it tells me out of the 34 ready to use, I have 6,000 left to go into next month. So if I have 34 ready to use, but I didn't use 6 of those, that's telling me that I actually used $28,000 in materials. Now, that's materials just used this month. Then I want to go ahead and add in these 2 guys. I look at my time cards and I look at the people who actually work on the baseball bats, let's say, and those guys' time cards add up to $26,000 of total fees that I had to pay them, including like insurance or including payroll tax. So $26,000 is added into my costs. And then I went ahead and just combined the factory overhead, but this would include things like depreciation on the factory machines, the property tax on the factory building, a supervisor's salary, small little parts that we use to make our baseball bats. I went ahead and added these up together. And when we do Wiley Plus, as you'll see in a little bit, they actually separate these out, which is fine. So total cost that I had to incur this month to make these baseball bats that are in production, I spent $118,000. Now, that's how much I just spent this month. Now we want to include in the stuff that was already in process. So the new costs that I had, plus the costs that I brought in from last month that they're still there. I can't just forget about them. They got carried over. So I had $118,000 this month plus the $1,500 that I needed to carry over. So I have $119,500 in my working in progress at any one point maybe. And then the last thing I need to know is what's my ending inventory. And I tell us right here in the work in progress, my ending inventory was $1,200. So out of the $119,500 that it's possible ready to use and get rid of or send on to the next work in progress or ending inventory, out of the $119,500, only $1,200 was left. So that means the items that are ready to move on, those costs that were manufactured and moved on, was $118,300. And that was what I wanted to get to. How much cost did I incur that actually went from point A to point B was $118,300. Then we can take this $118,300 and begin to move it into and find our cost of goods sold. So our cost of goods sold, if we're looking at it from the managerial perspective, we're going to take our next step. I didn't give us this information, but I would say, all right, if I had 118 moving on from this month in January, if I started out with 5,000 already in finished goods, and then I just added another 118,300 into this new finished goods, so now I'd have 123,300 total of items ready to be sold. And then all I got to do is subtract out the items I still have at the end of January to determine what I actually did sell. All right, you're gonna need to refer back to this sheet as we go on. But I want to now look at Wiley Plus, our Wiley Plus example that I have in Blackboard for you to look at. And I'm going to go ahead and pull that up, pull this one down. Here we are. Exercise 15-12. At first glance, you may think it looks a little scary. You see a whole bunch of open spaces with some dollar amounts missing and then part of our income statement down below. It's actually not as bad as you think if you simply just go back and use, and again, I know you can't see this, but if you pull back the sheet that we just went through, it should really help you. All right, let's, you can fill in the date here. Let's go in and I'm going to use my comments text. Okay. We're going to begin to fill in some of the blanks here and hopefully give you a good start with this Wiley Plus assignment. Okay, our first thing that we want to do is our first blank here would be our beginning work in progress. Beginning work in progress. Remember, that was our first item from the last sheet that we just did. In our beginning work in progress, it does tell us what that is. Here it shows 3680. The next thing we did on the example that I had is determine our total raw materials purchased. Well, in my example, I gave us the starting raw materials, what was purchased, and then the ending raw materials to figure out how much raw materials we used. In this example, they take it easy on us and they just go ahead and tell us our direct materials used. They don't give us the beginning or the ending, they just say, this is your final amount. So we know that our direct materials used was 21,270. And then, like in my example, the next thing that we'll come to after direct materials used is our direct labor. And it tells us that as well, 42,930 over here, direct labor. Now, where my example differs a little bit from this one is they actually want you to go ahead and piece together all of the factory overhead. Instead of just giving it to you like I did in one chunk, they're going to go ahead and have you separate it out. What I would do, and you might be able to see this, it might be kind of hard to see, but as I went through and I used one, so I always print off the assignment and work it out by hand. Sometimes that helps me. Is I'll mark out the item once I've used it. So like for example, I already have direct materials used marked out. I'm going to go to the first item that's not marked out, which is the indirect materials. Actually, indirect factory labor, sorry. And that was 5160. I've already used the materials. I've already used the work in progress for the beginning. I'll come back and we'll look at the work in progress in the ending. And we'll also look at finished goods later. But my next factory overhead would be the factory utilities. And so I would put that in here. And actually I'm going to put almost all of these in here except direct labor, which I've already used and I would have marked out. So if you want to, I would go ahead and pause this video right now and fill in the rest, add them up, and then we'll continue. If you add up all of them, I got 14,730, and that would be total factory overhead. Now, I don't know if it's exactly the same wording as Wiley Plus used, but you should be able to get pretty close to it. So the 14,730 was our total factory overhead. Our next line then is, just as I had in my sheet, I want to go ahead and add up all the costs that I used this month. And so a good wording would be total manufacturing cost this month. And if you add up these three things that I used this month, I went ahead and added them up and I got 78,930. And then the next thing on that sheet that we looked at just a little bit ago, the next item coming up would be, well, if this is how much I have made this month, I also then now need to include in how much cost that I have incurred from last month, because that I can't just ignore that cost. So total work in progress cost is what we'll call it. So I had $78,000 from this month of new costs plus the $36.80 from last month, and when I added those up, I got $82,610. And then remember, our last item is if I have $82,610 ready to be moved on, but I still have work in progress that needs to be finished. It's not quite done. Not all the 82 are ready to be done, because it tells me 4840 up here. Something back up here, we had the 4840. That's still needing to be worked on. So the actual cost, I'm going to abbreviate, cost of goods manufactured, because these costs will go to next month. The actual cost of goods ready to move on to the next step, or possibly the ending inventory, when you combine everything, it's $77,770. That's my cost of goods manufactured. Now, since we have that, we can now move on to my income statement. And hopefully you remember from the income statement from Accounting 101, the first item is always your sales or your revenue, whatever you want to call it. And they go ahead and just tell us right here in this first sentence, $88,900. Now hopefully also you remember from Accounting 101 what comes right below sales revenue when you're doing a manufacturing business. And that's your cost of goods sold. And so we're going to determine what my cost of goods sold is at this point, using, again, the very bottom page of my notes. To get cost of goods sold, you start out with, all right, how much goods did I have in finished goods from last month? I had 5460. That would be my beginning finished goods. And then, how much goods did I actually transfer over that are now done as well? So I had 5460 already here. I brought in a whole bunch more stuff for 77,770. So total, ready to be sold, so that's what we're going to call it, cost of goods available for sale. Cost of goods available for sale. When you combine those two, I got 83,230. We're not quite done yet, because just because we have them available for sale doesn't mean we actually sold them. So I got to take out then the items that are still in ending inventory or our ending finished goods. So I had 83,230 ready to be sold, but when I was all said and done, there was still 7860. I get that from up here. 7860 still left in my finished goods. So that means the actual items that I sold were valued at $75,370. And then our final item, back to Accounting 101 days. Revenue minus cost of goods sold gives us our gross profit. And so we take the 88,900, subtract out 75,370, and I get a gross profit of 13,530. So that's a good overview of the Wiley Plus example. The last thing that I want to do now is go through a few other Wiley Plus real quickly. We're not going to spend a lot of time on these, but just to kind of give you an idea of what the homework is for this week. In exercise 15-12, that's the one we just did. So here it is laid out. Hopefully it's not nearly as threatening now. So we're going to pick, remember this one was, our first item was beginning work in progress. And we would work our way down from there. 15-8 is just like what we just did, except they don't have you write everything out. They still want you to get the final answer though. Cost of goods manufactured, if you remember the one we just did, that was this last item, cost of goods manufactured. So you're off to the side somewhere else. You're going to basically be doing what we just did for 1512, but just giving one final answer. And then in part B, you're going to determine either the gross profit or the cost of goods sold. I don't remember which one it is. But you're going to be doing almost identical to what we just did, just not writing it all out for Wiley Plus to see. You're just giving the final answer. 15.9 kind of gets us started out in this process. It goes ahead and gives us the cost of manufactured schedule, which is what we just did. But you need to go ahead and explain here that you know where these numbers come from. For example, when we're dealing with the direct materials, remember it's our beginning inventory plus purchases equals ending inventory. Well, if we only have one of the three numbers, we can't solve this problem. So that's telling me I'm actually going to have to work backwards on this one. I'm going to have to start down here in my cost of goods manufactured and start working my way backwards to figure out the answers to get to one of these two answers, because I can't find two unknowns from just out of three when I'm only given one known. So this one you're going to work backwards to find your answers. 15.7, this is looking at the difference between a product cost and a period cost. So you're going to go through each one of these and note if this was a product cost, something that actually was in the factory to make the item, or is it something else like an accountant fee or something. 15.2 is just stating what is it? Is it direct labor, direct materials? I think that's important for us to know this first week. And then finally, kind of a review back to Accounting 101, but it's putting together a real basic balance sheet, just the asset portion. But the main reason I put this one on here is I wanted us to get in the mental framework that work in progress, raw materials, finished goods, these are all inventory items. They don't go anywhere else but in the inventory section of the balance sheet. All right, that should take care of us for week 1. We'll be back, check back here for week 2, and will help us get started there. Week 2 and 3 are sometimes some of the hardest weeks in managerial accounting. So check back and we'll get through it. Oh, before I do end this, one last thing. If you're watching this from YouTube, it helps me to know if these are actually helpful for you, these videos. And go ahead and if you could comment or hit the like button, that helps me to know. And if there's quite a few of those, I'll know that these were helpful. If you're watching this from one of the links, just email me. It's kvaneski@ivytech.edu. For a lot of you, I may be your program chair. It helps if I see the emails to continue to do this for my other classes, say intermediate accounting, which I haven't done, something that some of you will have to take. If you do like these videos and they're helpful, let me know. It does help in helping me to make more videos in later in the future. And at that, I'll leave us, and I'll see you next week.